All right, let's talk about chapter 10. Accounting for sales and cash receipts. Can you look at the camera and see if they can see me if I'm seated?
Yeah.
Yeah, okay. We'll get this posted for those who are missing class. All right. We're not going to do our investment project today because the stock market crashed yesterday. Do anybody know why?
I have no idea.
So here in the United States, President Trump had just come out and made a big statement about a huge investment that the government wants to make to develop artificial intelligence for 3 American companies. And this was a big, splashy announcement and a big push. And you guys have all heard of like ChatGPT, and there's some others, I think. Microsoft has, I forget what theirs is called, but.
Gemini?
Yeah, Gemini, that's another one.
I thought that was in US was sort of a politics.
It's like Ace or Chromebook.
Yeah.
Oh.
So what happened yesterday is China revealed that they have been working on an AI platform, and they actually are ahead of us.
Are you gonna have an AI race?
Yes, exactly.
Oh,
It's kind of like a Cold War in who's going to be ahead. And what I heard this morning is that their platform is 93% more efficient. In other words, it does not use as much computers and servers and electricity to do the same things that these other systems. So that gives them a huge leg up. So anyways, all of the Silicon Valley company stocks went down 15%, which is really a huge amount. So, and we only have 3 students here instead of 7 anyways, so we'll wait till Thursday to figure out where we stand. We should be by February getting back into the time period when the value of the stocks is going up again. Around Christmas, they kind of go down. Then the end of the year, because that's when they have to figure out their taxes, so they try to get their profit margins as low as possible. So when they calculate their taxes, they pay as few taxes as they can. And then they get into the new year and they brag about how great the company's doing, so that people will invest in them and their stock values will go up again. All right. Interesting article you can read later on page 283 about Best Buy. Let's look at 10.1. Accounts receivable. Think back to chapter 2. What did accounts receivable mean?
This is money that we had yet to receive.
Okay, but it's from,
An account that you had with someone.
is it from a
else.
vendor? What do we call the people who owe us money? Customers,
Oh, right.
okay? When we buy things from a vendor, we owe them money, that's accounts payable. But when we do work for or we sell product to a customer, they owe us money. Now, in the previous half of the year, we just had one big account called accounts receivable, and we kept track of all the money in that one account. Okay? But now, we're going to have a separate account for each of our customers. And we're going to keep it in an accounts receivable ledger. So we're on page 286 now. No, you read the book. 286 in your textbook. All right, so we have it's called a subsidiary ledger form, that's the blue one, and that has just the name of the customer. What is the customer's name on page 286, Cal?
Skinner College?
Skinner College. So they currently owe us $3,060.95. Okay? We have an account number for them. That's the balance brought forward. Okay. Now, the government says every time you sell something, we want you to charge more than what you have to charge, and that's sales tax. So the customer is paying a tax to the government on every sale. It's usually in fact, it's always the state tax. Anybody know what the state tax rate in Pennsylvania is?
6%.
6%. And there are some things that we don't pay tax on in Pennsylvania. Do you know what that is?
Food and clothes?
Clothing, food from a grocery store, but if you buy it at a restaurant, you pay tax. Right. 30 years ago, they exempted the sale of Bibles. But 30 years ago, they changed it and called Bibles just plain old books, and you have to pay tax on Bibles now. But anyways, so when we make a sale, let's say it's, get your calculators ready, let's say we make a sale for $500, what would 6% of 500 be?
30.
How much, 30? Okay. So, this is the amount of the sale. This is how much tax we have to collect from them, and they have to pay us that. But we have to keep that in a separate accounting. We have to kind of keep it in a piggy bank. So that at the end of a quarter, or maybe a month, we can take the total tax that we owe to the government, and we write a check and pay that money to them, and we clear out the sales tax payable. Well, if we add these two together, and that's the total what? What would we call that amount? The total the customer owes us. What do we call the amount the customer owes us? Accounts receivable, thank you. Total accounts receivable is gonna be the 530. Okay, so let's think about this. Are these gonna be debits or credits?
Tax is gonna be debit.
Debit?
Sale is gonna be credit.
They're both debits.
Let's go back to our main equation. Assets plus liabilities equals owner's equity. Sales is related to revenue and owner's equity. So that is going to be what, a debit or a credit? We're trying to increase it where?
Credit, yeah.
So it's going to be a credit. This is considered a liability. I collected this money from them, but I can't hold on to it. It's not revenue. I owe this to Uncle Penn. Get it? Instead of Uncle Sam. Pennsylvania, Uncle Penn. So I owe the $30 to Uncle Penn, so that's a liability. So that is going to be a debit or a credit.
Debit. Credit.
Liabilities.
What?
Did I do this wrong? I drew the line in the wrong place.
Yeah.
My bad. Okay. Assets equals liabilities plus owner's equity. There we go. Now, so tax is a liability, so it increases on the
Credit.
credit side. Accounts receivable, is that considered an asset? Yeah, because I'm expecting them to pay me. They haven't paid me yet. I expect them to pay me, so that's an asset. So that is the debit. Okay? So these two credits have to add up to the debit. This is the amount of money we're going to put on the invoice and say, you owe us this. And they understand, okay, we only bought $500 worth of merchandise, why are you charging $530? Everybody knows, oh, okay, that's right, we had to pay tax. But on the merchant, on our end, we have to keep track of this separately. We didn't actually make $530. We only earned 500 as revenue. And we're just kind of temporarily holding on to that 30. All right. So we have a sales invoice on page 287. And then page 288 we have sale on account. Of those three numbers, accounts receivable debit, sales credit, sales tax payable, which number should we always have as the biggest number?
Accounts receivable debit.
Correct, because the two credits have to add up to the one debit. So the debit should always be bigger. Okay? All right, so the sales journal has those columns. The invoice number is the sale number. Lynette was back on page 287. Wells Apartments in Carlisle, Pennsylvania, I know where that is. Okay, so we're gonna grade everything you did on 10-1 shortly. See if you did it correctly. Let's talk about 10-2 now. So page 290, posting from a sales journal. So we have an account card just for Wells Apartments. I don't know if Josh, does Josh on that one? And so we have that amount that they owe us, $481.77. They owe us $481.77. So we have to post that, the debit amount, to the debit column for Wells Apartments. Okay? We're not going to post the individual sales credit and sales tax payable. We'll do that at the end of the page. So just that one number goes to Wells Apartments. Okay? But we have the page number 11, so S11, and the account number 160 is the post ref. Oh, I forgot, I have your tests. Don't let me forget to give those back to you. Anthony got an 85. Zacchaeus got a 95.
Nice.
Whoa.
Bertina, 98.
What?
Mary Ann, 87.
I think I did better on the concept than I did on the terminology.
Okay, we'll let you look at it. All right, let's look at page 291 now. So we're posting all these individual sales, and then we total the three columns. What do you think? We're not turning the page yet. What do you think is going to happen to those totals?
They should add up. The sales credit and the sales tax payable credit should add up and equal the total accounts receivable debit.
Yes, the two credits should equal the one debit. So they show that on the bottom. But what else? We're talking about posting. Where do I post the total of accounts receivable debit? Where do I post that?
The accounts receivable?
And do I
Payable.
post it as, no, accounts receivable. Do I post it as a credit or a debit?
A debit.
Debit,
Debit.
because it says
Debit. It tells you right at the top of the column. You see that?
accounts receivable debit.
Okay, we're on the right-hand page. Right there, yes. Okay, so they added up all of these. We posted all of these individually to these customers, but then when you get that total, you're gonna post it to accounts receivable as a debit. Add up all the sales credit, we're gonna post that total to the sales account as a credit. Sales tax payable is a liability, so that is a credit. Okay, turn the page. They show posting those three amounts to those three accounts. Hey, that rhymes. Post those three amounts to those three accounts. And then you write the account number under that column in parentheses. Make sense? Okay.
That's what we did the last.
Yeah. Okay. So is 10-2 done?
Yes.
Yes.
All right, so we're gonna grade 10.1 and 10.2 in a little bit, but let's go ahead and talk about 10.3 now, which is what you're gonna be working on leading up to, is that today and tomorrow?
I think it's just today.
10.3 is today,
10-3 start,
10-3 is
tomorrow is
today.
10-3 finish.
10.3 finish. Okay, start 10.3 today, finish it tomorrow. All right, Mary Ann, read that first paragraph on page 294. A sale.
290. A sale in which the customer pays for the total amount of the sale at the time of the transaction is called a cash sale. 3 Green accepts cash, credit cards, and debit cards. Credit card and debit card sales are treated as cash sales because the business receives its cash in a very short time. A specialized computer used to collect, store, and report all the information about a sales transaction is called a point of sale (POS) terminal. Should I continue?
Yep.
Before any sale is entered, the number, description, price, and quantity on hand of each item of merchandise are stored in the POS terminal. When processing a sale, the sales clerk uses a scanning device to scan the Universal Product Code (UPC) symbol on the item.
Okay. And you've seen UPC symbols. We have one on the back of our textbook, right? Just about every item that you're going to buy has a UPC, and they can scan it. I remember helping many years ago in our bookstore when everything was just on little stickers, little prices on stickers to keep track of what we sold. We had to write the name on the sticker and the price on everything in the bookstore. And then we researched, found a cheap option, they've upgraded since then, where we could print out barcodes that would have the name of the item, the price, and a barcode. And now if you go in the bookstore, Miss Becky or whoever's working can just scan it. And it'll automatically take that item out of inventory and say, oh, we used to have 10 copies of that book. Now, because they bought one, we have 9 copies of that book. So that's helpful. But then at the end of the day, you can print out a summary report. So read the next paragraph. The POS terminal.
The POS terminal matches the number represented by the UPC symbol with the merchandise number to obtain the description and price of the merchandise. When all the merchandise has been scanned, the sales clerk enters the customer's method of payment. For a cash sale, the sales clerk enters the amount of cash given by the customer, and the POS terminal computes the amount of change. For credit and debit card sales, the customer swipes the card in the card scanner and identifies whether the card is a credit or debit card. The POS systems produces a receipt that contains detailed information about the sale.
Okay, so let's look at the left-hand side in that column. There's a code, there's a date and a time, and then it says that Visa was used to pay for total sales of $689.40, and we collected sales tax. MasterCard was used for $784.60 plus sales tax. Debit cards, cash, and so now if you added up all of the sales, you have the total sales, total sales tax, okay? Total accounts receivable. So you see where all that info comes from in there? Okay, Alyssa, periodically.
Periodically, 3 Green instructs the POS terminal to print a report of all sales. The report that summarizes the cash and credit card sales of a point-of-sale terminal is called a terminal summary. A terminal summary is also known as a Z-tape.
Oh, Z-tape. I have no idea why, but that could be a test question. So we're gonna remember that. Z-tape they print out shows the totals. Okay, keep going.
3 Green uses the terminal summary as the source document for recording sales in its journals. At any time, the POS system can produce a variety of reports to help management make decisions. For example, A report of sales by sales clerk would assist management to analyze a sales clerk's efficiency. A report of sales by time of day would assist management in scheduling sales clerks to match busy periods. A report of the average sale amount would enable management to track customer buying habits.
Okay, makes sense, right? So there's a lot, when you use a computer, there's lots of details that the owner can access. But okay, when are we the busiest? Which of my sales clerks is making more sales than the other ones? Maybe give a bonus to the one who seems to be talking customers up. Well, don't you also need such and such while you're here? Oh, we have a really good sale on such and such. You should really get it while you're here. I have never seen the price this good before. And so the customer buys more stuff when Alyssa is selling than when Regina is selling. Okay, so the manager can pull those reports and find out how the store's doing. All right, processing credit cards. Merchandise, if they were the same. Therefore, in this chapter, the term credit card will include both debit and credit cards. Kelly, sales information.
Sales information for credit card sales is stored in the POS terminals. Periodically, 3 Green instructs the terminal to produce a summary and print a report of credit card sales. A report of credit card sales produced by a point-of-sale terminal is called a batch report. A batch report can be detailed, showing every credit card sale, or the batch report can be a summary showing only the number and total of sales by credit card type. The process of preparing a batch report from point of sale terminal is called batching out.
Okay, so compare the report on page 295 to the one on 294. What's the difference?
There's batch under date,
There's no tax? Wait, no, yes, there's tax.
and then there's count.
What are
There's a lot of
returns?
different things.
There's a lot of differences here. Yeah, they're not breaking out sales and tax. They're just saying basically, this is the total amount that the customer's paid. And they're calling it sales, but it actually is the money that they paid in. So that includes tax, okay? Returns would be if a customer, your parents have probably done this, gone to Walmart and said, oh, I bought this, but my daughter doesn't like it, or my husband says it doesn't fit. So you go to the counter, and they always say, pull out the credit card that you bought this on, and stick the card in, and then they give you a credit on your credit card towards that sale, and then they can put that item back in circulation to sell. So those would be the returns, okay? So you actually are subtracting the sales minus the returns to get the nets. And then they have a count, how many sales. So which one is the most popular? Looks like debit cards are more popular for True Green. And then you have the total. So this one, the batch report does not tell me the same information the Z report does. It's different. All right, I want you to read page 295 on your own. Let's go to page 296 and look at a cash receipts journal. To encourage early payments, True Green allows some customers to purchase merchandise on account. Okay, so it's an account receivable when we give them the invoice. But they can take a deduction if they pay within 10 days. Now remember, we did this in the previous chapter, but we were the customer and we were paying our vendor and we were taking a discount because we paid them within 10 days. But now the tables are reversed. The customer can do the same to us and say, oh, I want to pay this off. I want to get that discount. Okay? So that is a sales discount. Sales discounts reduce the amount of cash that True Green receives on sales. Because customers often take these discounts, there is a special column called sales tax, or sales credit. Sales discount, no, I'm sorry. Sales discount debit. All right, so look at page 297. So here we're recording, it looks like the terminal summary, like the Z report. So this is the end of the day, it's the total sales, and if you look back at page 294, it's the sales amount, $6,280. Sales tax payable, $376.80. Cash debit, that would be the total, $6,656.80. Okay? No discounts on that, they're just paying at the counter. All right, page 298. Edmonds Hospital, we gave them an invoice and now they are paying us. So guess what? When they write a check to us, they don't owe us that money anymore. So it is a credit to accounts receivable, but a debit to cash. Yay! We like to see cash come in. So that's an easy one, top of page 298. All right, 299, this one, Palmer Dentistry got a bill for $1,450. But they were told if you pay it within 10 days, you can take a 2% discount. So if you use your calculator, do 0.02 times 1,450, you should get $29, right? Turn the page. So when we record that, we have to clear out the total amount they owe us, okay? Because they, by rights, don't owe us anything. So we put a credit for the full amount, $1,450, and then we put in two debits, the cash debit, which is the amount of the check they wrote, and the sales discount debit. So those two debits have to add up to the one credit. Okay. So I think that's today and tomorrow. Okay. And then the next section, which we'll do on Thursday, is really just posting to all of those, which is just time consuming, but it's not that hard. It's kind of like what we've been doing. All right, so let's get out your workbook and let's see how you do it. All right, page 239. Okay, let's look at that first one, Lenny Stanford. Did you post one number to that? You had a balance. Did you post it as a debit or a credit, Alyssa?
Debit
Okay, so what is the balance?
for September 2nd.
Yep.
$3,693.36.
Didn't you have a balance before that of 2,189.36?
Yes.
And then you're bringing in 1,696? Nope, that's not what you brought in?
No.
Okay, let's go to the bottom of page 239. Let's do the sales journal first. So September 2nd, Lenny Stanford. Which two numbers have to add up to the third number?
Sales credit and sales tax payable credit. Should add
The
up
two credits have to add up to the one debit. Okay, so let's make sure the number down there is correct. So Callie, what should the credit be? For sales tax credit. First entry on the bottom of page 239, sales journal.
Oh, 249.60.
No, I'm talking about the first line, September 2nd.
Oh! Oops, sorry, I pointed you wrong.
Sales tax payable credits.
Oh, 96.
96. Let's go to the left. What's this total sales credit?
16,000.
No, 1,600.
1,600.
So the accounts receivable debit, Alyssa,
I don't think I did anything correctly.
you did not. So these two credits have to add up to that one debit. The 1,600 is the sales credit, and then we charge tax, so the total amount they owe us, we add them. To get that.
When I added them all up
Okay.
here, they equal the
That
same
number's
thing.
not right,
So,
because you're gonna add
Is that
that
right?
plus that, should equal that number.
Oh.
So erase that, add those two together.
So what am I doing?
So we're adding this one and this one.
You have to add the tax.
Yep.
Add this to this. Yeah, the 16,000 goes here actually, and then we add 16,000. And 96.
Okay, so let's look up here again. We had this illustration. The sales tax payable is a credit, and the sale is a credit, and you add those two together, and it should be the total accounts receivable. Now, the columns, they have that column over here. They do the debit first, and then the two credits. Okay? Let's do line 2, which is September 6th. Washington City Schools. What is the sale number, Kelly? Sale number. You see the column? It says sale number.
Oh, 680.
Nope.
2 and 22.
222.
Oh, yeah, 222.
Okay, how much is the accounts receivable debit, Kelly?
680.
680. How much is the sales credit?
Uh,
Next column.
I didn't.
No? Did you put the number in the sales tax payable credit column?
There's no tax for that one.
There's no tax, right? So you should have 680 in column 2. You should have 680 as a debit for accounts receivable, 680 as the sales credit. But because it's a school, they don't charge tax. So the sales tax payable credit is blank.
Oh, so it's just 680 for the accounts receivable debit.
And for the sales credit, there's no tax, but this
Should be
the
the same
debit
number.
has to equal the credit.
Yeah.
Oh, okay.
All right. I see a lot of erasing going on.
Hopefully it doesn't have